see is that there is not even a minute that goes by today where people are not accessing their bank account using their mobile phones. So what that means is that mobile payments is doing to bank accounts what BlackBerries have done to emails. So mobile phones are fundamentally changing the relationship that people have with their bank accounts. Earlier, people were dipping into their bank accounts 3 or 4 times a month. Now they're doing it several times a day, 24 hours a day now. Now the other pie chart shows you, what it shows you is that 40% of the registrations that MCB is experiencing are coming in from Tier 2 and Tier 3 cities. Now, this is not bad for a service that's actually, they know that it's going to save them time. They're going to try and understand it because they know time is money and they don't want the world to go by. So this is a myth when we think that people in smaller cities will have trouble adopting to new technologies. As long as those technologies are improving their lives, they will show a greater affinity actually to come on to those services because they have the time to absorb these things. And we see it happening all the time. We see people coming in onto the mobile channel that have never experienced the great internet in the conventional sense because it never did anything for them before. But now the killer app is the payments, and it's through the payments that they are beginning to experience the internet. Again, something very relevant. Then this is a very interesting statistic, the table on the table. What it shows you is this, that in a large bank like MCB, we lose thousands of customers every quarter. They just attract. But the people that we put on the mobile phone and who start to become active on the mobile channel never leave us. So in the year and a half, we have had only 2 missing people that were active on the channel that we can't now get in touch with. And the thinking in my team is that either they've left the country or they've left the world. Because they just don't leave once they become active on the channel because it just makes their life so much easier. Now, I'm going to share an extremely interesting study with you. When we launched in July, August and September of 2009, what we did was that we took 1,000 customers out and we divided those customers into high users, medium users and low users. So high were 10 and more, medium were 6 and 9 and low were less than 6. Transactions, financial transactions I'm talking about. And over a period of 6 months, we saw a lot of people graduate into the high transactor category. And then we started to look at their behavior on other channels. So we were astonished to see that these 1,000 customers in August were doing about 600 and some transactions on the teller collectively. And these transactions dropped by 100 a month on the collective basis within the next 5 months. So there were 100 less transactions that they were doing, which is a 14% drop on the teller transactions. The ATM transactions grew by 200 transactions a month, which is good because they were more engaged with the bank account. But then the surprise came in that these 1,000 people were doing 4,500 or some transactions in August, which grew to 10,000 transactions by the end of the 5 months that they were doing on the mobile channel alone. Now, what the insight that is hidden here is the fact that when you enable people to make payments in the real time through their mobile phone, transfer money, pay bills, top up their mobile phones, and you don't charge for those payments, then what happens is that they start to make payments in a way where they wait till the last minute when they have to make that payment, and they only pay as much as is required. And this new concept, what we've branded at MCB, is just-in-time management of money. So what happens is that if you have to pay a bill, you wait till the last very minute and then you make that payment and you just pay that much. So as a consequence, the money starts to stay in your account for a lot longer. So over a period of time, the number of transactions that you do increases increase, and the amounts of those transactions start to decrease. Now, that's not all. What happens then is that you establish that account which is linked with the mobile as your primary transacting account. Now, when that happens, then you consciously and unconsciously you start to put more money and all your money into that account, because that account gives you the greatest access to your own money. And because of that, the balances grow. But that's not all. It goes further. Then the next step is that you want your friends and family and your business partners to also come in onto the same platform, because then it allows you to actually keep your money for longer and only give the money to them when required. So if you look at all of this, as a consequence, what we've seen is that the average balances for these 1,000 people that we were testing their behavior on have grown more than 30%. So their average balance was about $700 some at the beginning of the experiment, and within 6 months it grew to $900 and some dollars, which is a 30% increase in the average balances, because they were using or they became active on the mobile payment space. But what I've told you does not capture the entire story. For the entire story to be captured, you have to imagine a bank where 1 million customers are onto the mobile channel, and now they are transferring money between themselves, or they are buying content, or they are paying bills, and all of those accounts are with the bank as well. So what happens is that the money starts to flow into the system a lot longer, very painlessly, where the customer is doing all the work. So there's pressure release that happens at the branches on all the other channels, and service levels go up, you make more fee income, you make greater flow. So it's a complete game change from within the bank through the mobile channel, is what we're beginning to see at NCB. I'm moving on to the second part of the presentation, and here I want to start to talk about the fact that, if you see, children have very little control over their lives. There are very few decisions or influences that they have over their own lives. But when it comes to Happy Meals, or when they actually see the golden arches, then they tend to dictate themselves, and then they demand the Happy Meal. And the Happy Meal comes. But how is the Happy Meal priced? The Happy Meal, you don't pay for the toy. The toy in the Happy Meal acts as a powerful hook for you to get the Happy Meal. The same is true for mobile payments, which most players tend not to understand. But mobile payments are actually very, very powerful hooks that you have to actually make the customers use their account as a fully functional transaction account and start to build balances. Now, what happens if you start to price these mobile payments? If you start to price the mobile payments, the behavior change does not happen at the same levels, because the customer starts to think every time they have to make a transaction. So this is something that we are beginning to call the fairness principle. So in our case, what we've done is that we've gone back and structured something with our partner, which I spoke about earlier, is that we are only paying them on a per user basis annually, per customer. So it does not matter to us how many transactions that customer is doing. Now, for the customer to do the transaction, the customer is doing all the work, because he's punching in the values in the mobile phone, and once he punches in the values in the mobile phone to transfer money or to pay the bill, that transaction then flows through different systems which are connected on a straight-through basis. What that means is that the cost of doing every incremental transaction for the bank is negligible or close to zero. If that is the case, then why should we go out and charge the customer for doing an electronic transaction for which they're doing all the work? I mean, do we charge the customer when he walks into the branch? No. But when the customer accesses their own relationship on the mobile phone, do we need to charge them? No. When he comes into the branch and does a transaction, does it cost us a lot more than the mobile phone? Yes. We still don't charge the customer. So there's some thinking that we need to do as you go out and introduce your mobile payment player. How do you price or not price the payments? Think of the fairness principle when you do that. Now, our customers and our staff have always been a few steps ahead of us in telling us how these services can be used in new and innovative ways. So one of the things that we've just done, learning from our staff and customers, is this, that now we are starting to give out Visa prepaid plastics every time when we give someone a debit card or you give someone MCB mobile. So what happens is that our customers then give those prepaid cards to their friends and family, and they could be anywhere. Like today, in my wallet, I have a prepaid card. And when I need to spend money, I use my mobile phone and I load my prepaid card. So I don't carry my debit card, because if I lose my prepaid card, then I know exactly how much money I'm losing. If my wife calls me and says that she needs money, I'm sitting here and transfer money to her card, and she in Lahore can go and take money out of the ATM or spend it on the POS. Or if my brother needs it in Canada, I could just transfer money right now, and that's what our customers are beginning to do. So what they're beginning to do is that transferring money in the real time to their friends and family, which is linked with the mobile phone. Now, this is an extremely powerful insight. And what we're doing around this insight is that we're beginning to construct the next level of banking products for families, a family pack, a business pack, and an individual pack. So what is going to be a family pack? A family pack is that you come in and you get a pack which comes with a debit card and with a mobile link to it with 5 prepaid plastics. And you, as the head of the family, will start to then decide what the financial limits on those plastics are going to be that you would give to your mother or your wife or your husband or your son. And then every time you decide the threshold for which you would be informed when they go out and spend the money. So if your teenage son would go out and spend money on the POS, or your driver would go and fill gas at the station, you would get an SMS or an email alert, and you would decide the frequency of those alerts and the channel of those alerts. Let's face it, that people with money are either control freaks or they're on their way to becoming control freaks. So once you start to talk to them and you increase their ability to control their dependence, then they would love those kind of products. So the new kind of products are products where the person that's actually controlling the money is informed of what his dependents or her dependents are doing to the level that he wants to know. So that's the insight around which we are constructing these products. I'm just going to quickly show you the what we call the opportunity pyramid. This is the opportunity pyramid for Pakistan. I'm sure your opportunity pyramid